Well, the Atraco acquisition has certainly given some wings to the Gokaldas export stock today. But independent of what happens to the stock price movement today, I think the rationale of the acquisition and what happens next for Gokaldas is the bigger subject of conversation. And that is what we will do with Mr. Sivaramakrishnan Ganapathi, he's VC and MD of Gokaldas Exports, joins us right now on the show. Mr. Ganapathi, great having you. Congratulations on this deal.
Thank you for having me.
No, the pleasure is ours. Can we start with the basic rationale for this acquisition? Is it opportunistic? Is it strategic? Is it coming at a good value? Can you tell us a bit about this?
It's a bit of all. First of all, it has to be strategic. Otherwise, we wouldn't do an acquisition like this. It is the right size. It's not too big. It's not too small. So it's the right fit in terms of size. It gives us complementary geography. So we're currently present in India, and this one would give us access to a low-cost geography, namely Africa. That too, which has got duty-free access to North America, particularly United States. So it gives that. It's a very well-run asset. It has been the company has been in business for over 30 years. So over the years, they have perfected their operations. They're fairly well-run. So it gives us access to all of that rather than, us having to go greenfield, set things up, go through the learning curve. We short circuit everything there. And it gives us a new set of customer relations. So barring one customer, we have no overlap with their customer base. So it gives us that synergy as well. So there are multiple points of synergy that we have, complementarity that we have in this business. There's some synergy that we can drive in terms of future procurement, running efficiencies, reducing the overheads, etc., which we will all start working on. So from every aspect, this made sense for us from a growth standpoint.
So I heard you say that they're based in Africa, which gives them duty-free access to the US. I'm just trying to understand that point more. So that is the existing equation as things stand. Does it in any way impact the exports that Gokaldas would be doing currently to US, which might be under the duty regime, so to say?
No, it wouldn't have any impact on our current business. So our current business is independent. Whatever we export to US or Europe for that matter, we pay duty and enter. Whereas the products that we would export from Africa, which goes from Kenya, which goes into the United States, will enter duty free. So that's the access point. So from a customer standpoint, they enjoy that incremental cost advantage that you get.
Yeah.
So
but that doesn't. I mean, social media is agog with how Gokaldas will benefit from that. The existing ops don't benefit in any way from that, right?
No.
Thanks for the clarity. One standard set of questions: is this EPS accretive? From when is it EPS accretive? And what are the synergies aside of the customers piece that you spoke about? Because I heard you said that there is only one common large customer. Everything else is new for you.
Right. So it is EPS accretive. If I look at the last year's numbers itself and use our debt financing, etc., and load those costs, it itself will give us about 4.5 plus rupees of incremental EPS, not mentioning any growth going forward. So if growth happens, then that will also add incrementally to the bottom line, to the EPS. As far as the potential for that business goes, I think there is a potential to grow the top line once we take over. Once all the regulatory approvals come into place by end of October, and we take over, we will invest in plant and machinery, try to improve the margins of the business, and hopefully even grow the business. So there is a potential to add incremental revenue there as one of the factories is new, and there is considerable opportunity for us to add extra lines in that factory for growth. So we will do all of that, which will yield an incremental revenue and incremental bottom line, which will all add further to the EPS.
Sir, is there any low-hanging fruit, both in terms of improving the margins immediately of the acquired company, and two, in terms of cross-selling the products, essentially first selling the products that the company is making to the existing set of customers that you already have?
So I wouldn't count on cross-selling because customers take their time to make up their minds to going for a new geography. It needs some bit of hand-holding. And we ourselves will have to be comfortable with all the assets, operations, etc., before we start cross-fertilizing customers. One of the low-hanging fruits is definitely the opportunity to expand capacity there in one of the existing facilities where there is a potential. So that is definitely something which will immediately yield some top line and bottom line benefits. So that is the lowest hanging fruit. Maybe there is some incremental of capex required to upgrade plant and machinery, which will also bear fruit pretty quickly in terms of operational efficiencies and hence bottom line. So that probably will happen sometime next year.
Got it. Part two of my question is, are there complementary portfolios, the acquisition of which help you round up your own offering as a combined portfolio to customers who might be asking for that? Does it deepen your existing relationships with your existing clients because of additional product segments that come on stream which you may earlier not be present in?
Sure. So synthetics has a higher duty in the US. The import duties are higher, and they do a lot of synthetic garments with fabric coming in from China. So there is that advantage that we can take. They do children's products, which we don't do in Gokaldas. Almost 50% of their revenue comes from that segment. So that's an opportunity. Now, whether we want to play, we've consciously stayed away from that segment. We can use their facilities for outerwear, which they currently don't do, and we have a fairly good, strong capability here. So there are some product segments which are mutually exclusive, and those product segments can also be utilized. A quarter of their revenue comes from knits. We don't do knits at the moment. So there are certain advantages in terms of product types as well.
And have your own existing customers over the last 12 to 24 to 36 months told you about the willingness, the desire to procure some of the product segments that you are not present in from you, should you have those assets available?
So many of the discussions with our customers have always been around, can we source something from you in duty-free regions? Because that is a big upside for them. As far as product capability is concerned, they know that Gokaldas can handle any products. So it was less on product types and more on can you look at duty-free regions, namely, say, a Bangladesh for Europe or Africa for US, etc. And this one presented itself because we are strongly leaning towards the US market. And hence, we thought that Africa for US makes more sense for us, at least for now.
Most certainly. Okay. So in that sense, it all comes from the house of Gokaldas, which is an added benefit. But just wondering, what I actually meant to ask was that you said that you constantly stayed away from the kids' apparel business. It's a highly competitive space, but maybe your clients might have told you that we would love to procure from you should you have that. And now you have that. That is what I meant when I said
Correct.
Product segments.
Correct. Absolutely. And we can steer them towards Africa and to that asset and start, serving them from there. Absolutely.
Okay, great. The other aspect is your own strategy. Now, you have, I'm guessing, the last time that we spoke, which was maybe 9 months ago, you had spoken some mentions about what you would do with the existing debt and how things would go. Now you made an acquisition, I believe, in Bangladesh as well, and please correct me if I'm wrong. There is this that you've made. What is the strategy, sir, in your mind about what happens over the next 12 months or 24 months?
Okay, so we have not made any acquisitions in Bangladesh.
Okay, sorry. A plant in Bangladesh.
That's correct. So we intended setting up a plant in Bangladesh, and we slowed it down. We, given the tough market conditions that was prevailing till recently, we said, we'll put it on hold. We'll wait till an opportune time comes and then trigger the plant. So we haven't yet taken that decision of, when to time our investments into Bangladesh. So far, we have not invested a rupee in Bangladesh, though we have identified a plant, formed a JV, etc. But we have not really done an investment there. So now that we have this acquisition giving us an opportunity to tap duty free, we will take a call on Bangladesh and how do we want to proceed going forward. We have the time, the next 3 to 6 months, to take a decision. It's not mutually exclusive. Every decision will stand on its own legs and will be based on the merits of the case. As far as strategy goes, we will continue to focus on expansion. Apologies. We will continue to focus on growth. And from our standpoint, we would like to maintain a 20% year-on-year growth in the business. We feel that the opportunity is large enough for a good player like Gokaldas, and to serve our customers better, we would like to have a wider footprint so that we can, depending on the product profile, depending on what the customer needs, etc., we can serve them from much wider geography. So this is a step in that direction. So having a low-cost manufacturing location is a step in the direction. So any incremental capacity, we would always look at lower-cost regions. And, whether it is Africa, Bangladesh, north of India, we are looking at all these as low-cost regions from our standpoint, which will have a longer-term sustainability. Likewise, all this is an operational side. Likewise, on the design side, we will be investing more in design, setting up US office. All these is separate. Those are all getting ourselves closer to customers. So they're all independent events which will all work in parallel.
Got it. Last couple of questions, Mr. Ganapathi. One, you will, I believe I read the release in the release, I think you mentioned that you will finance this via debt plus internal accruals, no equity.
Yes.
I've now heard you say that you will also look at maybe expanding the capacity in Africa. Now that you have this, and if the situation is improving, which I believe it is, you might think of Bangladesh plant as well. Would all of this happen via internal accruals and debt, or do you foresee the need for any kind of equity fundraise as well in the next 12 months?
So currently we are, sitting with $50 million of cash, right? We don't, this is net of debt. So we are debt free in that sense. And for this, we will need about $40 million of debt to run, to acquire the company. We'll also be assuming a $15 million working capital loan, which that company has to manage its affairs. So that's what we will take on. We have enough cushion or headroom from a borrowing standpoint to bring in more funds if required to further our expansion requirements. But remember that the current business, which is Gokaldas, and the new business, once we take control of it, will be also generating profits quarter on quarter. So we'll be adding to the cash pool, going forward. So I don't foresee a need for equity dilution at the moment.
Got it. My final question, sir. Sometime in the last 6 months, I've heard companies as well as experts who track textiles talk about how the possibility of restocking from the Western economies is now coming, and this season could actually be a very strong season. Now, you made an acquisition at a very opportune time, if that is true. I would love to understand if you believe that is true, and if so, what does it mean for growth? You gave me a ballpark number, yes. I'm just trying to understand, if the season is strong, would you exceed that comfortably? So
the incoming season looks good, but the final word or the jury is still out as to how the economies will do, because I still feel that from a macroeconomic standpoint, the Western markets are still somewhat volatile, right? So while we're seeing decent traction from our brands, they're coming back, and from third quarter onwards, we are seeing reasonable traction in terms of placing orders on us, etc. I just feel that once the interest rates peak and stabilize in the Western markets, particularly in US, that's when we will start saying that, look, things are looking better and things can get better going forward. Until then, a high interest rate regime always puts a stress on disposable income, on purchases by customers, etc. So I would say, the early green shoots are there in terms of market revival. The brands are extremely conservative these days and are only buying when they are 100% sure that it's not going to sit in the inventory and it'll sell through. So my feeling is that these are early days. Revival is good, and as they develop more confidence in the market, I think they will come back for more. So from that standpoint, timing is good.
Got it. Great. Mr. Ganapathi, once again, congratulations on this acquisition, and hope it does even better than what you envisage. Thank you for taking the time out.
That's right. Thank you so much. Really appreciate it.
Much appreciate your time, and viewers, thanks for tuning in.